Okay, welcome to today's video. In today's video, we're going to talk about how to tackle the market from a technical and financial standpoint. Because the most important thing about trading is making a profit. I understand and I acknowledge that you need to know a lot. You need to know a lot. Now, it took me about 8 years to get to this point where I know this much, which was unnecessary. It was because of my aspirations, what I want to learn within, the industry. But in terms of trading, it's about profit. How do you make profit? The only way you make profit is understanding the psychology behind trading, actual trading. What happened last month, what happened 10 years ago, has no power, has zero, not even a 0.1 influence, has zero influence on what's happening today. A clear example of this is Bitcoin. Bitcoin is said to rise forever, which is that's not true. There's no such thing as a perfect price movement. Just because Bitcoin rose 10 years ago doesn't mean it's going to rise today. The most important thing about trading is about dealing with current price, today, this month. If I design a trade goal, that means I want to grow $100. I want to take $100. I don't want to emphasize too much on the initial deposit. This is trade goal definition. Trade goal definition is account size, account period, account goal. I have $100. I want to grow it into $1,000 over a space of 2 months. The only thing that matters when I attempt my trade goal is the time when I start. If I'm starting this month, the only thing that matters is from day one until the month end of this month. Because the only thing that can change my account and get me closer to my goal is a price action within this month. What happened 10 years ago has nothing to do with what's going to happen today. Because the market is economy. Economy is new. There was no AI 10 years ago. Even though there was, there's a lot of technology that's being hidden from, the public. Like AI itself, photo generating. We saw that on PlayStation, and then they decided to cut it out because we're moving too quick. Anyways, what happened 10 years ago is not what's happening right now. And what's happening right now is not what's going to happen 20 years from now. The good thing about the market is that it contributes the same way. There's certain things that never change. These are market principles. Trends don't change. Momentum don't change. Structure doesn't change. I don't want to talk about market structure. Market structure is higher highs, higher lows, a break of high. I'm not saying it doesn't work, but I'm just saying that's not how the market is. There's price action structure. It's not based on higher highs or higher lows. It's price action. It's based on if the market is not moving bearish, it's moving bullish. Now that's something else. Like I said, it took me about 8 years to get here. For me to explain that, it's going to take you in a different realm of trading, which is not what you want. But from a technical standpoint, from a realistic standpoint, the only thing that matters is what's going to happen within the parameters of your trade attempt. If you're not attempting to trade, you can analyze. You can say, the price is most likely to go up. The price is most likely because of 2010, because of 1990. But if you are actually participating, no news has power over the market. The reason fundamental analysis exists is for traders to understand the echo that moves the market. The echo that moves the market is economy. Fundamental analysis is economy. It's telling you that regardless of what bank says, hedge fund says, institutional traders say, whatever they call them, the market isn't moved by that. It's moved by fundamentals. Not fundamentals in real time, fundamentals overall. And fundamentals is solidified routine. A company starts a production chain. As long as they can solidify the routine of producing whatever they are selling, it's going to keep on moving up. And whatever disruption that's caused in between is what we call an event. That's why we release news events. Now, this news event is what we call fundamental analysis. But fundamental analysis from a larger standpoint to say this fundamentals are going to move the market for a year is not true. If it was true, what's happening to Gaza would have affected the market to show fundamentals don't move the market. What's happening to Mozambique would have affected the market to show that fundamentally what affects the market is not, news from a decade perspective or 15 years perspective. And these things are just events. Why? Because there's a solidified or foundationalized routine that keeps things in motion. These things are bad, and they should actually move the markets financially. They should move the markets fundamentally because these are large events. But because of whoever is controlling the market, I don't say there's a specific group controlling the market or a specific people controlling the market. I just believe the market is moved differently from the laws that everyone else perceives them to be moved by. So back to the topic. The only thing that's important is what's going to happen with your account this month or your account size when you decide to attempt. Now, it doesn't matter if you fund $100. It doesn't matter if you have $1. It doesn't matter if you have $10. If you have skill and time and a trade goal, you achieve anything. So if I decide to fund $1, I've traded an account where it's like $8. As long as you can place a trade and the market can actually move that particular trade into profit and loss, that means you are at the table of endless opportunities and possibilities. And the only thing that can affect the market is what happens now. And the only thing that can move the market is what's happening right now. You are ready?